U.S. markets have probably priced in 125, maybe even 150 basis points worth of cuts from the Fed. Why have Asian markets not, though?
Well, the fact is that I think a lot of, while we see how Fed fund reserves rates and specifically how Fed fund futures in particular are priced, the fact is that doesn't always translate into what happens here. So I think right now there's still a bit of skepticism that specifically, the Fed, are they going to be quite aggressive this year when it comes to reducing interest rates? And some, right now here in Asia, don't really believe that there's going to be an ultra aggressive cut when it comes to interest rates. But with that said, there's still a lot of specific focus when it comes to the overall Asian economy. Asian economies right now are doing well. We're seeing specifically inflation having gone down. And, in certain markets, looking at places like Vietnam, they've already started to lower interest rates. So there are certain central banks already here which are actually, starting to lower interest rates. But with that said, a lot of the central banks right now in this part of the world are taking a bit more of a cautious approach when it comes to specifically what they're trying to achieve. Because the fact is that, yes, while inflation has come down, an ultra aggressive or too much of a cut here could potentially bring back inflation, which is something that the Asian central banks across the region do not want to have.
Ken, at a sector level within China, if you like, A shares, then do you express that through the China internet names? How compelling is the valuation there? And what areas would you avoid? Is it a no-brainer to avoid the property markets and the property developers, or are there even considered opportunities over there?
Yeah, it's going to be difficult for property developers right now. The fact is that when you look at overall exposure for property developers, even let's say within the MSCI China index, they're less than 1% now of the overall benchmark. A decade ago, they were 6 or 7%. So specifically, when we talk about the overall exposure when it comes to property developers within indices like MSCI China or CSI 300, their exposure is significantly less. And then when you talked a little bit earlier about internet companies, and when you talk about specifically some of the things going on, there's still a lot of potential policy concerns, which sometimes has investors, going the other way when it comes to investing. But then when we're looking at opportunities even within the tech space, we look at the hardware-related names. We look at specifically, some of the maybe more consumer-related, focused software developments. Those are sort of areas that we're looking at. As I mentioned earlier, you have to be a bit more careful when it comes to stock selections as well as sector allocations within China right now, given some of the uncertainties.